Ladies and gentlemen, thank you very much for coming this evening, despite the inclement weather. Certainly a great pleasure to be with you all again in person, and we do hope that you'll enjoy the proceedings this evening. I'm just going to say a few words. 2023 was a very challenging year for the financial sector, as interest rates in Europe and the US hit 20-year highs. While central banks were raising interest rates aggressively to counter inflation. This depressed both bond and stock prices, and the uncertainty around how long the process would last and where the interest rates would end up introduced a very high level of volatility into the markets. And we had quite a roller coaster ride as investor sentiment swung back and forth between optimism and pessimism. Inflation continued its downward trend from 2022, but the Fed, of course, continued raising interest rates because they weren't quite satisfied with the trend being irreversible, and of course they were still very high. Inflation was very high above their 2% target. By the third quarter of 2023, however, it seemed that the Fed had more or less decided to go on hold and to give a little time for their monetary policy measures to take effect. And what has happened since then, the data has tended to support that. So I think we're fairly optimistic now that we've got to the end of the Fed's current cycle of raising interest rates. However, speculation now has sort of shifted to from sort of trying to guess when the interest rates would level off. We're now trying to guess when they're going to be cut, and that is also introducing a fair amount of volatility because when one bit of data comes out, everybody's very optimistic. They expect that the Fed will be cutting massively in a very short time. And then, of course, other data comes out, or other opinions come out, and the horizon is pushed back considerably. So what we do expect, though, is that the Fed has more or less finished with raising interest rates. And what that means is that, as I mentioned, speculation really is shifting to the downside. That means that it's a really good time for investors to pick up new securities, because the securities that are being issued now are much higher yielding than the ones that are maturing and the ones that are being called. We have significant parts of our portfolio and our clients' portfolios that are invested in bonds which are being called between now, they started earlier on this year, and we expect that the trend will continue into next year. So there will be very good opportunities for picking up attractive yields at good prices, and the possibility of earning capital gains as well as good income during 2024. So, as I mentioned, or getting on to sterling, to say a little bit about sterling, our focus has really been on maintaining a strong capital base. The experience of last year, of this year and last year, has shown the importance of that because, of course, rising interest rates have a big impact on mark-to-market effects of the securities in your portfolio. And sterling's capital base has been able to absorb those mark-to-market losses, which are unrealized and unlikely to be realized. But it is good that we've husbanded our capital over the years. We also focus on credit quality because, again, higher credit quality securities don't fluctuate as much as the lower rated securities. And that's another area where we think our clients benefit as well from our advice. A little bit of further housekeeping, just to remind everybody that we do have very strong external partners who help to keep Sterling on the straight and narrow course. KPMG are our external auditors and have been since the inception of the company. PricewaterhouseCoopers are our internal auditors, and they're responsible for vetting and testing our internal controls and procedures. Both of those auditors report to the audit committee of the board of Sterling, and the chairman of the audit committee is sitting right at the front row, Mr. Max Rochester, former senior partner of PricewaterhouseCoopers here in Jamaica, their Caribbean practice, in fact. So those guys keep us on our toes, and to help them, we have 5 chartered accountants on staff, and they all adhere to the maxim of trust but verify. So our accounts and operations departments also keep us very much in line. So thanks a lot for coming. We do hope that you'll enjoy the discussion this evening, and also the food and drink that we have for you. So thanks again, and let's get right into it. Marian.
Thank you, Charles. Thank you, everyone, for joining us, and our apologies for the late start. A special welcome to our listeners on Nationwide. We hope to keep you company in the traffic. So, everyone, again, my name is Marianne Rossamar. For those of you that don't know me, I am Vice President of Trading and Securities at Sterling Asset Management. I have the pleasure of moderating the panel discussion this evening. The topic for this panel discussion is 50 years of economic stagnation. How do we break the mold? We'll have about a 40-minute panel discussion on that topic, open up the floor for Q&A, and we'll then conclude the proceedings. I will start by introducing my panelists, and I'll start furthest from my right with Mr. Dennis Jones. Dennis's claim to fame is that he is the husband of the former IDB regional head, Therese Turner-Jones. But he is also known as an economist, an esteemed economist with an illustrious career, starting at the Bank of England and then the IMF, where he spearheaded numerous economic programs across Europe, Asia, and Africa, and he was actually the IMF's resident representative in the Republic of Guinea. To his left is Dr. Samuel Braithwaite. Dr. Braithwaite, thanks again for coming. It's his second year here, and we've invited him back for his controversial opinions that usually stand in stark contrast to everyone else's. So we're really pleased, and we look forward to what you have to say tonight. Dr. Braithwaite is an accomplished economist with published research in globally recognized academic journals. He is also a lecturer in the Department of Economics at UWI, and we're very pleased to have him here. To his left is Mrs. Nataliya Mylenko. She is the lead economist for the Caribbean at the World Bank. Nataliya oversees engagement on macroeconomic policy, financial and private sector development, governance, and poverty. She has been the lead author on many World Bank reports and has spent over 20 years working with the largest multilaterals in over 50 countries. Nataliya, thank you so much for joining us tonight. And last but certainly not least, we have our president, founder, and CEO, Charles Ross, who has been a keen observer and commentator on Jamaica's macroeconomic environment for the past 30 years, or at least for my whole life. So Charles, thank you for your input we know this is a topic you feel passionately about and a problem that you'd like to solve in the next 30 years. So thanks again, everyone, for joining us. I'm going to get straight into it. So our first question, we're focusing first on the causes of low economic growth. And In Jamaica, at least, a lot of the conversations around our low growth have revolved around social issues, such as crime or education and corruption. And those are very serious problems. In the views of some people, those problems may in fact be the symptoms of low growth instead of the causes. And I'm interested in answering that question. So my question to you is, number one, is economic growth a macroeconomic phenomenon? And if it is, should we be looking at macroeconomic policy for the solutions, or as we try to understand Jamaica's history of low economic growth? And perhaps I will start maybe with Nataliya, as you're the female on the panel.
Thank you. Yeah. Ladies first, I guess. Yeah, okay. Even with difficult questions, appreciate it. No, thank you so much. And as an outsider, so maybe I'll start and also be maybe provocative, or we'll find out who is more provocative on this panel. In the World Bank, we view, and our analysis of the situation in Jamaica is that indeed, if you look over the long-term growth, it has not been very high, or rather to say it has been low. There were periods of fast growth, but then there were prolonged periods of very low growth, and they were also intercepted with crises. Not all of those crises were natural disasters. Many of those crises were either caused by the crisis elsewhere in the world, because Jamaica is a small open economy, and so any events in the broader economy impacted strongly, or they were results of some crisis domestic. So if we look over this long term, we see that the growth has been volatile and overall slow. Whether growth is a macroeconomic phenomenon, I think our assessment is that macroeconomic policy is a very important element of growth because it's required to ensure macroeconomic stability. But it's necessary but not sufficient condition for growth. So you can have a country with a very stable macro, but it may not in itself result in growth. So then the issues that you brought up, Marianne, at the beginning, we believe do impact growth. So fundamentally we call this structural factors, some of the socioeconomic, but also some of the policies and structural elements of economy. So for example, which sectors dominate economy has implication on the growth rates. Some sectors, low value service sector, for example, retail trade, or maybe some subsectors of tourism cannot deliver the very fast growth rate that you would see in some sectors. We have higher rate of innovation, some of the digital economy sectors that we see that's where the growth comes from. So in that sense, to deliver higher rate of growth, it's not that Jamaica can just now say, well, then forget macroeconomic policy, let's fix structural. It has to sustain its effort with macroeconomic policy. And we see that there's been a lot of success on that. Like since maybe the past almost a decade, we see very strong macroeconomic policy performance, a commitment to strong economic policy macroeconomic policy. But we also see that it hasn't really brought that growth just yet. Maybe we're on the cusp. But I think continuing with structural reforms is what's important also. I'll stop there.
I appreciate that. Thank you, Nataliya. Dennis, I see you reaching for your mic. I'll give you the opportunity to go next.
Nataliya has actually sort of done the heavy lifting, which is that macroeconomic policies are very much a necessary part of getting the right things in place to see how an economy can prosper. And I think one of the things that's very interesting about Jamaica is, by contrast to, say, any other country over any period, whether it's 5 years, 10 years, 15 or 20, is how consistent the policies have been I think, over a 50-year historical arc, you can say that you saw a lot of inconsistent policies or policies that didn't seem to be pulling in in the same direction. And one of the things that's perhaps made the more recent period quite different is that consensus in terms of where the administrations appear to want to go has been, more evident than not. I think when you look at how other countries have performed over any period of time, whether it's 10, 15, or 20 years, that lack of consistency is often what makes a great difference, whether or not policies are successful or not. I think the other thing that Nataliya said that is of interest to me is, what are the kind of sectors that you could be looking at to give you faster growth in any situation? And, countries like Jamaica that have focused, say, on exploitation of minerals and agriculture tend to get less growth out of, any set of situations. Other social things obviously make a difference because other social situations obviously make a difference because the ability of the people to actually contribute is very important. So to the extent that education in Jamaica is not of a certain level or as high as some would say is necessary to generate growth in, say, high-tech areas, I think that's something you have to look at in addition to macroeconomic policies. The fiscal policy, monetary policy, however you want to take that, whether it involves the exchange rate or not, are interesting contributors, but they can't take a country along of themselves.
That's an interesting perspective. They can't take the country along. I'm sure there are some studies that may wish to disagree, but Dr. Braithwaite, could I invite you to go next, and then Charles?
Right. Thank you, Marianne, and thank you to the entire Sterling management team for inviting me here again. I honestly thought that after last year, you won't want me to come and cause trouble. So where do I start? I think a good place to start is to name a country that I cringe every time I hear it mentioned in Jamaica. And that is Singapore, yes. I don't like the comparisons. I think they're unfair. I think Singapore is an outlier. And I often say to students that Singapore is where it is today because of a Jamaican, a man called Sir Stamford Raffles, who was born on a boat off the coast of Port Morant. Anyway, but for tonight, let's talk about Singapore. And the reason why I want to take that road and to bring up Singapore is that for small countries like Jamaica and like Singapore, you cannot develop rapidly without engaging with larger countries. So your relationship with the larger countries is what is going to determine your path. There was a time when there were countries who aligned themselves with the USSR or with, countries in the West, like, Great Britain or with the United States or what have you. So in the case of Jamaica, we have to ask ourselves, and Singapore, why is it Jamaica has not been able to grow as rapidly as Singapore has grown? And the answer I would give has to do with how these two countries engaged with outsiders. Yes? Or more importantly, how foreign countries viewed Singapore and viewed Jamaica. Jamaica has always been a country where the big players have extracted resources, whether it was sugar, and in recent times, your best asset, your people. Singapore is so small it can fit, I think, in St. Thomas. Yes? But yet, it has grown rapidly. It has a GDP per capita, don't quote me on this, but it's somewhere north of $60,000 or thereabout. While we know in the case of Jamaica, it's hovering around $5,500. But Singapore without any resources, provided the West, and we must give credit, of course, to Lee Kuan Yew, but we must also give credit to that man I call a Jamaican, Sir Stamford Raffles, for setting up shop in Singapore. For you to go from the Bay of Bengal all the way up to Beijing, the fastest route to get there is through the Malacca Strait. There is Singapore, right? In that region of the world, you have so many countries that produce most of the things that you have in your home if you look around your kitchen. And it's not only about China. You have the Vietnams, the Indonesias, you name it. So you have the world's workshop or workshops in that part of the world. And Singapore is right there, where 40% of world maritime trade passes through. Further to that, if all the ships are passing through or passing by Singapore, finance is going to develop. If you look at New York is the world's most foremost financial center, yes? How did it start? It was a major shipping port. Again, the engagement with the rest of the world, right? So, of course, with New York engaging with Europe and the like.
Thank you.
Jamaica has never had that advantage.
Okay.
And again, I'm not knocking and saying, okay, we should not question economic policy. What I'm saying in terms of the big picture, we have to stop beating up ourselves and recognize that the world views Jamaica quite differently from how it views a Singapore, for example.
Thank you,
All
Dr.
right,
Braithwaite.
I'll stop there.
I've never seen that in the production function for GDP, but it's an interesting point. I'm going to give Charles the floor.
Nataliya.
Thank you.
Yeah, well, you know, I've heard the economists speak, and I'm not an economist, so I better be careful. But I think the point about stability not being sufficient is very important. But there's more to economic policy than just fiscal policy. There's monetary policy, and there is the Samuel mentioned the export-led growth policies of many Southeast Asian countries and how effective those are. And a brief look at the production function would suggest why the export-led strategy is so effective. In Jamaica, we've done the exact opposite. We've had consistent policies favoring what has been euphemistically called a subsidized exchange rate, what I think economists might call an overvalued exchange rate. That has been a pillar of Jamaican government policy for many years. What that does is it subsidizes imports and taxes exports. And again, a brief look at the production function, there's only one negative, and that's imports. So boosting your imports is certainly not going to help economic growth. So again, my question is, do we need to look at our macroeconomic policies and try to question whether they have played a significant role in the very low rates of growth that we have suffered over the years?
Charles, I'm the one asking the questions here, and you've fast-forwarded it to more questions that I had, but I think it's an important point, and at this point I'd like to just quote some data that we found was pretty interesting, and courtesy of the World Bank. We got really great historical data on Jamaica's GDP. Just for context, Jamaica's GDP has grown at an average annual rate of 0.6% between 1972 and 2022. That's a 50-year horizon. Over the last 10 years, it's been 0.055, and over the last 5 years, it's been 0.19%. Even more stark, I think, is the fact that our total GDP in US dollars in 2022 is actually less than the GDP that we had in 2019 pre-COVID. So this problem, I think the point we want to make here is that this problem has existed over many decades, and there are many countries, as Charles mentioned, the Southeast Asian countries, which had poor education and poor literacy and not the greatest social environments. And they figured out a way to grow. Now, this is a conversation about growth, not development, just to highlight that. So my question to the panel, which is kind of a tangent to what Charles concluded on a while ago, would be, what is the monetary policy? We know that Jamaica has been great on the fiscal for the last 10 years, or has made a lot of improvements on the fiscal, and we have stability, but we're not having any growth. The second component of macroeconomic policy then would be monetary. Is our monetary policy conducive to economic growth, the ones that we have been pursuing? That would be my question.
Yes, not very high numbers. And indeed, if we look at if we look at the per capita level, you actually end up lower than where Jamaica was at some point in time. Not a very good outcome. Now, Jamaica is not the only country in that situation. If you actually look at the Caribbean, other island states, it's a very similar situation. So there is a certain similarity that these economies, they started at a certain point. A lot of them followed very similar pathway. These are now largely very service-dependent, tourism sector-dependent economies. They used to have larger agricultural sector that kind of took a hit for various reasons. It never evolved into what you wish to be, not just primary agriculture, but higher value agri-processing. Basically, the source of growth is developing industries where you will have higher value added. So somehow in these countries that didn't happen. Manufacturing never really picked up anywhere. Grenada has one university, so they are like half tourism, half university. That's the economy of Grenada. But those are much smaller states as well if we compare it to Jamaica. Now, the question on whether the monetary policy and the undervalued exchange rate or overvalued exchange rate, there's a very large debate on this everywhere. It is tempting to think that by changing one variable, such as exchange rate, you can change the entire prospects on export and all of those things. One should certainly evaluate whether the mix of the policies is the right one, whether the exchange rate that is there, that is technically speaking floating, to what extent it is freely floating and whatnot. And there can be a discussion about this. And I think that it's good to have that discussion. But I think it's also important to make sure that the broader range of factors is taken into account. You depreciate in what? Tomorrow there is going to be large competitive manufacturing in a country with the cost of electricity that Jamaica has, or maybe not. And what will happen to that cost of electricity if you depreciate more and if it's still an imported fuel that is generated? So I think, again, understanding the factors that contribute to this lack of competitiveness, you could say, or potential competitiveness that we do not really have test cases to really look at. And there's no manufacturing plant that used to be selling things and stopped selling them because exchange rate was wrong, right? So I would nuance that. I mean, economists, on the one hand, on the other hand, on the third hand. Yeah, there we go.
That's a good point, and I'll let someone respond. I think my follow-up question on that would be, does the monetary policy play a role in us naturally deciding which sectors we are competing in? Is perhaps the reason that we've been stuck in these sectors because of the policy? But that's just a follow-up for the context for the other responses.
It's very hard to follow Nataliya because she says all the right things, and it's kind of hard to disagree. For me, the monetary policy aspect is really about exchange rate policy, and I think one of the issues in a place like Jamaica is to what extent is the exchange rate something that actually can drive economic development, or is it a sort of indicator to people of other things going on in the economy, whether they're good or bad? I mean, what's happened in more recent times with, let's call it a managed float, is that the central bank has decided that a certain kind of exchange rate level is one that it wants to support. And, again, I don't want to jump ahead, but, Charles talking about, subsidized exchange rate, you can say that maybe what the managed float has done is put that subsidy there and, make it sort of very difficult for people to see the currency going to a level that maybe is indicated by other factors, like the differential between inflation in major trading partners. But the other thing is, my understanding is that in Jamaica, you also have a kind of vice, which is that, a lot of people import to export. So when the exchange rate shifts around, they can gain and lose at one and the same time. And then the other thing is that a lot of exchange rate changes, which have tended to be on the downside, feed into retail prices that people have to pay. So there's a fear on the part of a lot of the populations to see the exchange rate go to certain kinds of levels, and I don't think that there's been really any desire to sort of convince people that letting the exchange rate go to certain levels is really the right thing to do. It's not an easy political sell to let the exchange rate slide, if you see what I'm saying.
Good point. Thank you.
Right.
Dr. Braithwaite?
Where to start? I like to talk about exchange rates, by the way. I think the best place to start is to clarify something. Now, when you look at the value of a country's currency, you really can't say much just by looking at the value. So if you look at the South Korean won, right, it has a lower value than the Jamaican dollar relative to the US dollar. But when you look at the South Korean minimum wage, they have deliberately set their minimum wage to that of the US minimum wage. All right? So that's the first thing to get out of the way. In fact, as another example, I'm Guyanese, by the way. Guyana's exchange rate is around 210, 215. But what we have to recognize is that the Guyanese dollar has been relatively stable for 2 decades. So the first thing to get is not the value of your currency per se which matters, but whether it has been stable and for what period. Yes? From the time I landed here in Jamaica in 2014, the Jamaican dollar was around about 100 Jamaican dollars to 1 US, and now it's hovering around 155. All right? So pretty much a 50% depreciation over that period of time. I think Jamaica is in a much better space now when it comes to monetary policy. Much, much better space. Back in 2017, the Bank of Jamaica moved towards what is called inflation and inflation targeting regime, right? In addition to that, the central bank also moved towards operational independence, and that is important because in the bad old days, various prime ministers or ministers of finance could simply call the governor and, say, look, you need to increase the money supply or what have you. Or you need to buy up these government assets or what have you. Yes? So we've moved from that. And the Bank of Jamaica has independence to decide on monetary policy. Now, in recent times, and by that I mean if we go all the way back to January of 2022, and if we look at the entire year, 2022, Jamaica did very well in terms of its exchange rate. The exchange rate was relatively stable. In fact, there was some amount of appreciation between February of 2022 and by the time you got to about November, December. And this is important because when you look around the world, 90 countries, 90 countries saw the value of their currencies fall against the US dollar. 30 of those countries, the depreciation was on the around more than 10%. All right? So when we think of that situation, Jamaica has been doing well in terms of managing its exchange rate. Now the question is, why is that important? Some years ago, at a forum at the university, a businessman made clear, he said, look, if the expectation is that the value of the Jamaican dollar is going to fall by, say, 3% or thereabout, then he is going to adjust his prices maybe 5%. Because if your expectation is 3, there's a chance that it might depreciate further than that. You see? Now, there is a view which makes me cringe about, okay, if, we let the Jamaican dollar float, and, if the Jamaican dollar loses value, it means Jamaican goods are cheaper and we can sell more exports. I don't buy that.
That's not economics. That's not proven in economics.
Well, let me say this. Whatever you see in the textbooks, you have to be very careful about those things.
What about in real
Most
life?
of the textbooks.
What about in real life at other countries?
Or
what about businessmen that say, so we have exporters that are clients, and when their products, Walmart buys more from them when their products are cheaper.
Here's what I would say to that. Jamaica is a small economy. Jamaica cannot influence prices. Jamaica cannot compete with Asian countries. And let me give you another example, right? When it comes to the exchange rate, tourism is a big earner of foreign exchange in Jamaica, right? When your family goes online to purchase the ticket to come to Jamaica, is the price of the ticket quoted in Jamaican or US dollars? Right? The price for the hotel is US dollars. Foreigners don't come to Jamaica because the value of the Jamaican dollar has, makes things cheaper for them.
Well,
no.
I think you should
So-
ask Keith Collister after this whether when occupancy rates are higher, depending on the value of the Jamaican dollar. I'm going to hand over to Charles
All
for
right.
him to take this question. If
Cool.
Jamaica's monetary policy could be affecting the sectors we're competing in and thwarting growth.
Well, again, I ask a very simple question, and I know that there are two hands to every issue. If your government policies are subsidizing the value of imports and taxing exports, how do you, in that context, have an export-led development and growth policy? How do you possibly succeed in that? The other big question that I would ask is that, and again, I'm not an economist and I'm going purely on theory, the idea of markets setting prices is to facilitate the most efficient use of resources. And we also have to remember that subsidies have costs, and that those costs, when you have a public good being subsidized, that cost comes back to the public purse. So when we subsidize our exchange rate, when we have an overvalued currency, we are facilitating those who are most able to consume to get the biggest subsidy. And in a country which has severe inequity in distribution of wealth, do we really want to pursue policies that subsidize the consumption of the wealthy at the expense, of course, of the poor, who pay most of the taxes, especially value-added taxes? So I think that, there's a lot of questions that need to be asked about exchange rate policy, and at the end of the day, we cannot forever maintain that overvalued currency. It comes back to haunt us every now and again with these periodic crises that Nataliya referred to. In any case, it comes back onto our fiscal policy because the subsidy is made up by government borrowing in hard currency, whether it's from the World Bank, the IMF, or the International Capital Market. And again, that poses a cost to the country. When we have to spend more on debt service, there's less to spend on social services and on critical infrastructure and all the rest of it. So that you really can get into a very negative spiral, with this ambition to maintain consumption above the levels which we can afford, but based on what we earn.
Thank you, Charles. So we are focusing a bit on monetary policy. We've gotten a range of views as to how powerful it is or isn't in determining the economic outcomes of a country. I think one of the things I wanted to touch on as well was, as we're speaking of exchange rates and monetary policy, there is a view in Jamaica, and if you read the Monetary Policy Committee minutes of the Bank of Jamaica, they refer a lot to the exchange rate. And traditional economic theory tells us that inflation differentials drive currency movement. In Jamaica, there seems to be a view at the central bank and in society in general that the reverse is true, that depreciation of the exchange rate drives inflation. I just wanted to get the viewpoints of the economists here to say, what is the correct economic theory behind this relationship, and why would this thinking be so widespread in Jamaica?
I'm still on the starting line here. Well, I mean, look, I'm there with the professor about models are correct as presented in the book, but when you apply them to real life, nuances are very important. So Jamaica is a small economy. What happens to its large trading partners impacts what happens in Jamaica. So if there is a higher inflation in the US and you import a lot of things from the US, you import that inflation. So that does happen. That is definitely a channel. If Jamaica, coming back to the point of exchange rate management, one could say maybe Jamaican dollar currently is undervalued. It's a stable country. Rating agencies give high rating. How many stable countries around there? Not so many. If there is a lot of inflow, then there is a higher demand for the Jamaican dollar. It strengthens the Jamaican dollar. Maybe it's undervalued. Maybe it's not overvalued. It's possible.
But wouldn't that show in the flows?
But
wouldn't that show
going
in the
back to
flows?
inflows, my view is, well, inflation differentials, everywhere inflation is compressing, differentials are minor. I think other factors beyond inflation differentials should be looked at. And if you look at the empirical literature on inflation differentials, on exchange rate overshooting and all of that, it's a very kind of moot point. So I personally, it's important to look, sorry, still many hands.
I mean, one thing about the exchange rate is that it isn't just about financial flows, and it isn't just about inflation differentials between countries. It also includes things like, risk. So in a global context, the exchange rate includes some factor that says, I think country X is riskier or less risky than country Y. So it's always interesting when you see a country in any situation maintain a relatively stable nominal exchange rate. So one of the things that intrigued me over the last few years is how it is that the Jamaican dollar doesn't seem to shift, notwithstanding all the things that are going on. And I think, part of to me anyway, the idea of the subsidized exchange rate is that there is a policy decision that this level is, for whatever reason, right. In the more recent environment that we've had, maintaining the rate at around 150 or 155 has been helpful in suppressing some of the inflation pressures that might be coming in from outside. But I think the other thing about the exchange rate that's kind of interesting is that there are obviously certain sectors where the exchange rate actually doesn't matter because, what's actually being sold isn't being sold at market price. So, for example, bauxite, there's a negotiated price. So when the exchange rate shifts, it's not going to drive bauxite exports higher or lower simply because of that normal thing. And, that's also something that affects some of the agricultural sectors. I mean, what's interesting is whether or not you actually have, if you can identify sectors that actually are sensitive to exchange rate movements, then how have they actually reacted when the exchange rate's gone up and depreciated as opposed to appreciated, as Samuel was saying. If the anticipation is that the exchange rate is going to depreciate by 3, then a retailer or manufacturer is going to add 2. So in that sense, you're pushing up prices irrespective of what's happening to the exchange rate.
But wouldn't that cause demand to go down and thus help inflation decline? I mean, you can look at the earnings results of companies, and when they're, you'll see the decline in sales when things get more expensive. I'll hand over to Charles one
I
second.
think you're right.
I disagree with that proposition, and that that export industries can be not dependent on the exchange rate because prices are set outside. In fact, that is a very powerful reason why a flexible exchange rate is needed. As I think Samuel mentioned, exporters are price takers. When you're exporting something to the US and you increase your price by 5 cents and they go buy from somebody else. So if you're having costs rising in your production environment and the currency is not adjusting for that, sooner or later you're going to go out of business because you have no influence over the price. The other thing that we need to remember too is that equation affects returns, and it affects the attractiveness of the local economy for investment. So if you have a situation, and we've seen it in some countries here in the Caribbean, where domestic prices and the exchange rate gets out of whack, what it means is that less investment takes place in their export sectors. And so that affects their economic growth. So the other question too is, okay, if we're importing 2% inflation from the US, why is our inflation 5% or 6% or more? So again, I don't understand the imported inflation argument if local inflation is higher than that of our trading partners. Not to mention money supply growth.
Dr. Braithwaite, I won't take away from you the opportunity to comment on your favorite topic, the exchange rate.
If we go back to around, I think it was around 2010, that period is important for Jamaica because one of the things that was happening at the time is that the Bank of Jamaica was doing the groundwork to move towards inflation targeting. And I think they did very well over that pilot phase as such. Yes? But part of the story has to do with fiscal policy. In fact, for students of economics, one of the things you're told very early is that inflation is always and everywhere a monetary problem. But there's some economists like John Cochrane who would say, well, inflation or persistent inflation is always and everywhere a fiscal problem. And I think that applies very readily to Jamaica if you go back to the 90s and you look at irresponsible government spending and the like that drove inflation. But fast forward to 2010, and again, just before the IMF came in and all of that, the country was moving towards a situation where care had to be taken in terms of fiscal policy. So now what you have is you don't have that reckless type of behavior to fuel inflation. And if you look at what was happening then in terms of inflation, it was tracking still higher than Jamaica's trading partners, but it was relatively low. Definitely not in the double digits you had in the 90s and so on and so forth. You see? So I just wanted to make that point in terms of inflation. And even now, yes, inflation is relatively elevated, but the question we have to ask ourselves is the counterfactual question. If the Bank of Jamaica was not doing what it has been doing, we probably would have had double-digit inflation to contend with. And who suffers there?
What I find fascinating is that the money supply is increasing, which to me seems counterintuitive to a regime where you're trying to lower inflation. Why is the money supply rising? Why are they increasing the money supply if they're trying to fight inflation? That's my specific and last question to you.
I cannot give you figures here, and so my apologies for that. But I question that view that the money supply is increasing because
That's their data, not mine. That's the BOJ's
well,
M1 and M2 data.
Well, I'll tell you why I question that. Because if we go back all the way back to 2021, the Bank of Jamaica would have been working to pull money out of the system. In fact, I will tell you that this is not officially stated, but one of the concerns of the bank would be, illegal activity. We talk about lottery scamming or what have you. Those type of activities cause a lot of cash to move around, you see? So part of the reason for them increasing interest rates is to take money out of the system. Because if they don't take money out of the system, right, that would have an adverse impact on the value of the Jamaican dollar.
Thank you, Dr. Braithwaite. And I really enjoyed getting the perspective of the panelists. I think we still have a lot of divergent views, but I wanted to give the audience an opportunity to ask a few questions. And is there, I think, a mic in the audience? Michelle, are you facilitating some Q&A from the floor? I think we even have someone from the Bank of Jamaica in the audience, but I won't call him out and make him feel self-conscious. Are there any questions from our audience? Because if they don't have any, I'll just keep asking, which is not a good thing.
Oh, you want, it's okay, we can share this one.
So I take it that to mean everyone just wants to get to the food and drink component of the evening. All right, everybody. Well, I think I gave everyone the time. So I'll conclude. Oh, no, we do have one question. Oh, I can't see.
Check 1, 2.
Okay, yes. Oh, we have a question right here. Hold on. Here, Doc.
I'm not an economist, but I just want to a very practical question. I think growth is also, apart from all of this, growth is related to productivity. And I just question there are a lot of these other factors, but how are we going to grow at the productivity levels that we do have now, and how is that related to our educational standards? And relate that as well to the development of technology, how far behind we're in technology. Artificial intelligence is coming forward. How are we going to put this together at the education levels that we have now, at the low productivity levels? It's interesting to talk about exchange rates and so on, but how do we get growth at these levels that we're having now?
Great question. How do we get growth with where our current productivity levels? Charles, do you want to go first? I know you have some views on.
Well, what we need is investment in capital equipment, the capital stock. That, again, I think it relates to, and it's a bit of a circular situation. Again, strictly speaking, if you have, investment will go where the price signals are sending it, where the returns are to be earned. So if our economy is suggesting that people should invest in the retail trade, importing and distribution, that's where they're going to invest. The levels of technology that may be required in that may be far less than if people were to invest, say, in agro-processing or in manufacturing one thing or another. And so really, again, what we do need, if we want an export-led growth economy or strategy, then the macroeconomic signals or the signals should be such that they encourage investment in that area. And if investment goes into manufacturing type activities it's likely that the productivity and the growth of the productivity in the economy will increase. I think Nataliya mentioned that the service sector in general is not a sector where you have a great deal of innovation and improvements in productivity, because it's extremely capital intensive, and it's also very personalized in its development. If you have a good factory, you can have, half a dozen bits of equipment producing thousands of widgets and one or two people managing them. If you're running a hotel, it's a slightly different business.
Anybody else?
You're raising a very, very valid point. And I think also this question we are grappling with, the growth, is a very difficult one. It was an easy one. We wouldn't have, that graph, okay, for 50 years, okay? And that's the average. And lots of very, very smart people tried lots of many different things. So I don't think there is a very simple, easy solution. What we see is, yes, how do you get to higher value added? One line of thinking, and I would agree with that, would say that right now, maybe we live in the world of like the knowledge economy and all of those things. So where you get that higher lift in productivity and all is this knowledge intensive types of industries, until AI will replace all of us, but hopefully we have some time. Then it means you really need to have that education base. And I think it's recognized broadly. Your finance minister is very keen, in particular on STEM education. But I think then you also have really a challenge, in particular in the Caribbean region. We were looking at migration numbers. So migration is an issue across the board for many countries, Central America as well. But in the Caribbean, the migration is high skill. I'm sure all of you have your anecdotal stories on this. So in Central America, it's low skill, unskilled who go up north. In the Caribbean, there is that. So how do you then think about incentive structures where assume you invest in all this education, but then your brightest sit and they can go and into the market where they can get higher pay? And how do you innovate back home or bring back that investment? And what is beyond just that? So there must be a set of circumstances where they would choose to come back. Some countries really tried. India really tried. Malaysia did a lot of work to bring back. They had lots of diasporas. I know in Jamaica there is a lot of work because those people may be successful where they are. They might be willing and interested to come back. So how do you change that dynamic? And it's not too simple, but I think there are interesting experiences to look at, but not a silver bullet, I wouldn't say. Just my...
Thank you. Oh, Dennis,
Before the
you have
question
something
came
to
from
say?
the floor, I said to Samuel, the elephant in the room that we haven't spoken about is productivity. I mean, the things that affect growth other than economic policies are quite complicated. But, if you ask yourself a question like, how can you get, sorry, is it too close?
Can we get a little volume on the speaker?
Sorry. I can hear it very loud here. So what can we expect from a labor force where, as you're saying, I can't remember the numbers, it's like 4 out of 5 graduates migrate. And if you're getting out of the education system, fewer than 60% of high school leavers coming out without qualifications, what kind of labor force are you going to get? It doesn't really... Does it matter in what sector they go? Can you actually say that you're producing people who can actually do better in any sense than if those numbers were not, if you like, so negative?
Thank you, Dennis. I think we have another question in the audience. Can we get this gentleman a mic, please? Oh, I'm sorry. Okay. Hold on. He's standing right there.
Good night.
Okay.
So back on the issue of import and export. Good night.
Panel, listening to the discussion, what immediately comes to mind is the fact that we have not picked winners. And I'll give you an example. You think of Japan, the motor car industry. When they wanted to tackle America, what they do? They say to Toyota, every car you export, we give you $800. Then they said to all the car manufacturers, if Nissan has a good transmission, you're going to use it. Then they structure the thing in such a way that that they facilitate something. You look at a country like New Zealand and what they do with kiwi. They produce a fruit that is sustainable. Why we can't do it with our berry and so on? So you get that feeling that our problem is what a great prime minister says. Jamaica's never lacked ideas. What it lacks is continuity of effort and fixity of purpose. I'll leave it with you.
Thank you so much. Okay, so back on the issue of import and export. So I've heard a lot being discussed. I've heard the suggestion of education. I've heard the suggestion of just a number of things. But I've seen the conversation stray from the export being taxed and the import being reduced. Now, I get the topic of education and all of that, but I think in our current society now, in this generation, I've seen where we have a lot of small business and entrepreneur where it's still a problem to monetize, even to get investment when it has to do with export in particularly. And again, I heard where you guys suggested, yes, if we're competing with cheaper prices, it's unlikely that we will strive in that area. So as a young entrepreneur, what is the current advice in that regards in terms of I'm exporting some goods, right? What is the current advice in growth in that area? Because the advice that I've seen and heard so far, it's about the future, and I get that. But me now in this situation, given that I'm still experiencing the tax and all of that, what is the advice going forward?
So just to understand, you're asking for advice as an entrepreneur who is exporting a product.
Yes, but in the regards, not just me, but saying how does this build our economy if we are kind of crushed in this area?
Okay.
How can I contribute to building my economy as a Jamaican entrepreneur in that regards, given these factors, one being the tax and all of that?
Okay, well, we have one entrepreneur on the, or one known entrepreneur on the panel. I'll ask him just to give you his 2 cents, literally 2 cents on the matter.
Can I also weigh in?
Okay. Essentially, what I would say is that exports are, and exporting is a very effective way of growing an economy, and it's a very proven way. It's one that would certainly work here in Jamaica, as it has worked in many other countries. To be a successful exporter, I think you have to focus on controlling your cost, because you have absolutely no influence on the price that you get for your product. You're basically a price taker. Inflation in Jamaica is generally higher than in our export markets. And so you have to be super efficient in order to be able to survive. So you need to make sure that your operations are extremely efficient, use the best equipment that you can get your hands on, and control your costs. I think that's essential.
Dr. Braithwaite had something to add.
Yes, so it is agreed that Jamaica cannot compete with larger countries out there, yes? But Jamaica has a secret weapon. And that secret weapon is the Jamaican culture. right? You talk about Bob Marley, you talk about Bolt, you talk about Shelly Ann. People know of Jamaica. They respect and they love Jamaican culture. Yes? So you can build on that. Now, in terms of the practical issues relating to exporting, for small entrepreneurs, I don't imagine you can fill a 40-foot container, right? And then to ship it to where have you. So what do? You have to combine or join with other companies, other entrepreneurs, and you ship together. But what you find in Jamaica is that there's often a lack of trust, right? We have to work on that because you cannot do it by yourself as a small entrepreneur. You need to join with other people to get your product out there. And the last point I want to make, you have to utilize the diaspora networks, right? You sell your product to them, and the diaspora then shares it with their friends. And before long, assuming, of course, you have a good product and the like, and you move from there. It's going to be hard. It's not going to be done overnight. It might take you a decade or more to really start reaping profits or what have you. Yes? And when I say reaping profits, I mean, things that you can expand and do other things with. But don't give up. Keep trying.
Thank you, Dr. Braithwaite. I think it was worth it to hear you answer that question. To hear an economist talk about trust and culture is not something we're used to. So thank you for those anecdotes. And thank you again to our panelists for joining us. Thanks to our audience for your patience this evening. And please enjoy the food and drink. Thank you.
Are we still gonna do it randomly?